Welcome to Business Today Television, and yours has been one of those dream runs on the market. We'll just show you a daily chart of Sonata Software. The stock has doubled to more than 1,000 levels in this 8 months that we've seen, and it's been a further spectacular rally. If you see from the lows of March 2020, that's the COVID low. The stock was at about 125 and now at about 1057. So that's 8x multi-bagger in front of you. And in the past 8 months, January 2023 to August 2023, the stocks doubled from 500 to 1,000. Mr. Dhir, these are very, very heavy expectations out of you to maintain this kind of an outperformance on the stock as also on the business must be one of those challenging tasks that you face every morning. Tell us, give us a granular feel of how clients are negotiating business these days. Do you feel pressure on margins? How is attrition shaped out in the month of the previous quarter? We had seen a lot of top line companies reporting very few additions to their overall employee strength. How are you negotiating these two challenges, sir?
First of all, thank you for your compliments. We are very pleased with the progress we have made in the recent times. Our teams have done a fabulous job, so credit to our teams to do that. But beyond that, to your specific questions, I think the market has been, it's uncertain times in the market, to be candid. The deal flow, especially for us in the high-tech sector, there have been decision delays, without a doubt. But beyond high-tech sector, we haven't seen any significant slowdown for us. And our strategy was very simple. We wanted to continue to close large deals every quarter so we can keep building the buffer to avoid the market eventualities that might happen. When you build the large deal pipeline, one of the things that you have to do is to also plan for the staff in advance because the transition, etc., takes a quarter or so. And that's what we have been planning for the last couple of quarters specifically to make sure that we are ready for that. As far as pricing is concerned, we haven't seen any pricing pressure come through just as yet. I think the pricing very much is holding up. In fact, in few cases, we'd had some price increases as well that we could negotiate from our clients, which I think has been nice. And as far as the overall broader margin situation is concerned, I think we're pretty bullish about where the company is at from a growth perspective. We will continue to make investments. We have called out in a 3-year strategic architecture that we expect to be about 500 million in the international business and low 20s EBITDA. That's a journey we are on. We made tremendous investments in sales, in marketing, and very recently, very pleased to announce, you might have seen that we announced the Harmony.ai, which is really our response to the whole generative AI space. And we believe that as market comes back around on the data side and AI investments, we think we can capture the market with our responsible first AI. And that's been something that we are very certain about because the whole AI market is full of hallucinations, full of compliance issues. So we're really taking a position as a company to be responsible first in the AI space, and hence our investments in Harmony.ai are very timely. And we're beginning to see a lot of pipeline build up as soon as we launch that suite out.
Okay, absolutely, Mr. Dhir. And let's talk about your domestic
Mr.
products.
Dhir,
Can I take a question, Shell?
Tanya, please continue.
Yeah, thank you so much. So, Mr. Dhir,
Please
I was
continue.
saying that let's talk about your domestic products division as well. Though that's a lower margin business for you, but it had an good quarter of financial performance. Gross contribution grew by 6.4% on a quarter-on-quarter basis, and obviously 22% on a yearly basis. But how do you see this business, shaping up going forward?
Yeah, no, we're very pleased with the progress we're making in the domestic business. Candidly, I think 6% quarter on quarter and 22% nearly year on year is a very good outcome. It's a very high ROCE business, return on capital employed. It's a very high. It's one of the industry leading ROCE business. Our strategy is simple. We are diversifying or expanding that business to be more multi-cloud channel So far, we were very one product channel, and as we move forward, we are trying to take the market position of a multi-cloud provider for our clients in the domestic market, and also to look at some significant focus areas in terms of doing some end-to-end projects and SI work as well for these clients. So the two parts of the strategy to really get to multi-cloud as well as large deals in the Indian market as well. But very pleased with the progress we have made. I think it's a very predictable business. Very, very pleased with the outcomes that we've seen in the most recent quarter.
Mr. Dhir, I wanted to take your broader view on this artificial intelligence that you spoke so clearly about. There's this fear, in circles which are not so aware about this particular sector, that this is the end of India's software story, led typically by low-cost employees that we are able to hire in India who do top-end work for clients based in the US. Do you feel this fear is justified? Will we see a large-scale, attrition, or companies such as yours asking people to leave because now software automation would replace a human body, sir?
No, it's a great question, and in my view, with every turn of technology changes and enhancements, there is always a talk about for the last 20, 30 years that I've been around in industry, the people have prophesied that this will take the headcount down, and this turn will now result in some more headcount reductions. Candidly, it has never happened in the past, and I expect it will not happen now as well. That's our collective view as a company. We believe AI is yet another tool for the human capital to now take advantage of and really build the next set of automation, next set of efficiencies, next set of enhancements in the business. And that's what we're beginning to see. AI, as you know, has been around for a very long time. I think the work to be done, candidly, is to use AI in a responsible way. You don't want the consumer information. You don't want the proprietary information of individual, the PII data, as it is called, to be misused or abused in any way. And hence, really, our focus has been as a company to really provide a responsible first AI and really drive that insights from a consumer mindshare perspective. We believe this is just the early part of that journey. We believe this will open up new doors and vistas that perhaps were not open to IT industry in general and IT services from India, broadly speaking. We believe that will only be accretive overall to the business environment, and hence our investments, hence our messaging is positioning, and our solutions are really tailored towards that. So far, whatever we have seen so far, what we have been talking to clients and have been in over 20 conversations with the customers, everybody is looking at it as an add-on to be more efficient and really deploy the human capital back into doing more and more value-added activities as we move forward.
Right. The other thing, Mr. Dhir, I'd like to see clarity from your end. Is these stratospheric valuations relative to large caps in the IT space that small cap and mid cap IT is enjoying? The problems across the sector are very well known. We've seen a slowdown happening in the BFSI space globally, and this is one of those main sectors where Indian IT makes the maximum amount of margins and maximum amount of top line. What, according to you, are mid-cap IT companies doing better than large-cap IT companies that justifies this huge markup that companies such as yours enjoy over large-cap names? I don't want to take those names, but you understand the thrust of my question, sir.
Look, I cannot comment what others are doing. What I can comment is what we are doing. And we are very focused on taking market share away from the competition using our modernization engineering vector. We believe we have a secret sauce. We believe the tools and the IPs that we have built over the period of time and the frameworks that we built over a period of time continue to differentiate us. We believe the partnership that we have built with the product vendors is really beginning to help us accelerate. So in our mind, in this environment, the agility with which the suppliers can move, the customer service and experience and the quality that the suppliers can provide, and the ability to pivot to new technology changes is a differentiating factor for at least companies like us. And that's what we're doing. We're playing to our strengths. We are moving fast from a technology adoption perspective. We are moving fast from evangelizing and the benefits of newer technologies coming up. And we are more responsible, making sure our quality delivered to the customers is of top-notch caliber. So that's really what we're doing. It's hard to comment really on what competition is doing, what others are doing, and we're really head down for the last. I've been in this job for about 5 quarters now, nearly. That's what we've been doing, and that's what we intend to do go forward as well.
Okay, and lastly, Mr. Dhir, your expectation in terms of organic growth in FY24?
So much like we have said in the prior times, we have aspired to be one of the fastest growing companies in the market and get to 500 million international business, that is in about 3 to 4 years time. We have been delivering top quartile performance from a growth perspective consistently for last several quarters. We expect to be in the top quartile performers go forward as well. And of course, we'll calibrate up and down depending upon the market's vagaries. But still, whether the market is up or down, we expect to be in the top quartile performer in that sense. Even the most recent quarter, as you've seen, we are perhaps in the top 2 or 3 companies, maybe top 1 or 2 itself in terms of performance, and we expect to be in the top few select club of top 25% quartile performance as we move forward. So that's really our aspiration, and we feel pretty good about where we are and to make sure that we can deliver to that expectation.
Absolutely. We also hope the same, and all the very best for the upcoming quarters as well. And on that wonderful note, thank you so much, Mr. Dhir, for taking the time out and being with us here on Business Today Television.
Thank you so much. Bye-bye.
If you like the video, do like, comment, share and subscribe.